Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network. Before we get into today's show, there are a few things we have to go over. Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program. Kanish Chugh, welcome back to the podcast series, mate. It's always good to have you.
Owen, thanks for having me.
Today we're talking about the ETF Securities Hydrogen ETF, HGEN. We just chatted off air about how the semi-ETF and the hydrogen ETF were both really popular on day one. So have you been pleased so far with the reception to both of these funds?
Yeah, we definitely have, and I think it's indicative, one, of investors being comfortable with using ETFs, and also investors looking at these sort of thematic ETFs as a way in which to gain access to stocks and themes that are really hard to just, from an Australian perspective anyway. There's very limited Australian stocks that operate in, say, the semiconductor space or the hydrogen space as well.
Yeah, in this podcast, we're going to talk about the hydrogen thematic, what it is, like how it works, everything you need to know basically about kind of the value chain. And then we're going to talk about companies in particular. Ken's just going to draw out a few companies that seem really interesting. We're going to combine that and say, how does the portfolio come together for HGEN? And then we'll wrap up. So it's going to be a pretty short and concise episode, but it's a really interesting one. I actually had another podcast this morning where we were looking at Fortescue Metals Group, and most people will know that Fortescue is the company, one of Australia's biggest iron ore companies, founded by Twiggy Forrest. But he's also come out and done a series of lectures and earned his PhD, and he's really turned his spotlight to the environment, climate change. And one of the big things that Fortescue want to get done is using hydrogen, green hydrogen, to power things like rail, trucks, and ships to make their services, and indeed the whole entire mining industry services, more efficient and sustainable. So maybe just to kick things off, tell us a little bit about the hydrogen thematic, because to be honest, we see Elon Musk talking about, battery powered cars and all that sort of stuff, but we don't often talk about hydrogen as kind of like a massive alternative to what we currently use, which is internal combustion and the like.
Yeah, it's interesting. You talk about Elon Musk and Twiggy Forrest. So Musk obviously talks a lot about battery technology, given he owned and founded Tesla, and Twiggy is often now more recently talking a lot about hydrogen. So maybe Twiggy's trying to become the Musk of the hydrogen space. But hydrogen, it's an interesting energy source, because as an energy source, it's not new. It's an old energy fuel, but it's widely used today. But what is really going to be driving the future of the hydrogen industry is green hydrogen, and being able to produce hydrogen that has a zero carbon footprint. So to break it down, hydrogen produces about 3 times more energy than petrol, but a lot of about 99% of hydrogen at the moment comes from fossil fuels like methane and coal, so really impactful on the environment. But as an energy source, you talk about battery technology, and battery tech has had a lot of focus, and we've got an ETF focused on it in ACDC, and we've seen a lot of investment interest. That ETF is nearly about 400 million under management.
Yeah, right.
And a lot of that has come in the past 2 years, and partly has been because you see government support coming in on the technology of battery tech. You've seen investments started to come in, so investors have started to take notice, and they're starting to look at it, and you start to see growth in companies associated with battery technology. With hydrogen, what are its uses? And to a lot of people, they call it the Swiss Army knife of decarbonisation, because it can be used. And you talked about, Twiggy wanting to use it in shipping and train, so really heavy duty vehicles. And that's where we see potentially hydrogen being used for. So battery tech is, it's high power, it's lightweight, but so it can be used in passenger vehicles. It can be used for home use, grid storage, personal electronics. That's really battery technology. So there is definitely a space for that. Hydrogen, trains, ships, planes, but also going beyond that. It can be used in, say, the industrial side in terms of steel making or the production of ammonia, which is very, a necessary resource in agriculture. So in terms of it's a main ingredient in fertilizers. So hydrogen use potentially a broader, but they don't necessarily overlap too much. Yes, you may see some hydrogen passenger vehicles, using, and companies like Toyota and things like that are very much looking at that. But, the hydrogen applications, are quite wide. And I think a lot of people are saying, well, if we're wanting to get to net zero emissions by 2050, how do we do that? Battery tech is not going to be the only way we can use to get there. We need to look at other sustainable sources of energy, and hydrogen is definitely a key, especially green hydrogen in particular.
So I'll get you just to fill us in on what that green hydrogen means in just a second. But just for those of you that are kind of new to this, I had to do a bit of research before this. I jumped on YouTube and did some reading before we came on air. And my understanding is basically what happens inside a hydrogen engine is you basically have oxygen and hydrogen come in, and then there's an electric rod which turns into basically a magnet when these two particles combine. And so when you get those two particles or those two things on the periodic table, when they combine, you get water vapor coming out the other end. But what they do is they actually this rod actually turns into kind of like positive and negative, which then can be used to move an engine. So you have these two kind of elements. We've got oxygen, and then we've got hydrogen combining to create that power. And what's really impressive is out the back comes water vapor, which is obviously no greenhouse gases involved. Whereas when you drive an internal combustion engine, you've got all the other stuff. Can you tell us though, what is it? Because I feel like the actual, like, how do we get hydrogen in the first place is kind of a good question to ask, because everyone knows kind of oxygen's in the air around us, but what about hydrogen itself? And I think this is where it plays into the green hydrogen idea.
Yeah, so I think it's good to then take a step back and go, what are the colors of hydrogen? And there are 4 primary colors. And so let's start with brown hydrogen. And brown hydrogen is, one of the most common. It comes from coal. So the process, it's a lot more involved. It's complicated than gray hydrogen, which I'll talk about in a minute. But it starts by sort of heating up coal that produces carbon monoxide. And the carbon monoxide is then reacted with steam and essentially produces hydrogen and carbon dioxide. So again, from a environmental impact, very harmful to the environment. So that's brown hydrogen. So it's made from coal essentially. You've got gray hydrogen, which is the common by far and also the cheapest. And that's essentially made by reacting methane with steam. So the reaction occurs under really high pressure and it's in the presence of a catalyst. And it also produces hydrogen, but it produces a lot of carbon dioxide. So all of a sudden, you've got gray and brown hydrogen, the two most commonly produced hydrogens at the moment because of their cost efficiencies, but they also produce a lot of carbon dioxide. So then you start to go down the path and you talked about, now we've got blue hydrogen. So that's your third color. Now, blue hydrogen is also produced from fossil fuels like coal and methane, but the difference here is they've added something called carbon capture and storage, or CCS. Now, the whole idea behind CCS is to capture those carbon dioxide emissions that brown and gray hydrogen produces, capture them and put them underground. Now, basically, the idea being is that you can produce hydrogen from fossil fuels without harmful greenhouse gases. But what people don't realize with carbon capture and storage and blue hydrogen is that a lot of companies aren't actually able to capture all of the emissions. So there was a study done on Chevron's carbon capture and storage programs in WA, in Western Australia, and they were finding that they only captured about 1.8 to 2% of total emissions. So yes, it's potentially a solution for, a sustainable source of energy and a sustainable way to produce hydrogen, but the technology isn't allowing it to capture enough of the carbon to really have a more positive impact on the environment. And that's where you come out with green hydrogen. And so green hydrogen is the sort of the newest way to produce hydrogen. It's probably the most important, and it's what a lot of Twiggy talks about, Andrew Forrest talks about. And it's made by zapping water with an electric current, and that electric current is done by a technology called an electrolyzer. So what that does in sort of chemistry terms is it splits hydrogen and oxygen, and by splitting water in this way, that's called an electrolysis. And essentially, green hydrogen is produced. And to your point, it has a zero carbon footprint. All it does is it produces steam. So on one side, it splits out the oxygen, and that's the steam. And on the other side, it splits that water and produces hydrogen, and that hydrogen can be stored and put into fuel cells. But the cost of green hydrogen is really expensive. It's halved since 2010, the cost, and it's coming down. And yes, as more corporations, as more companies look towards developing more of this technology and researching into the idea of electrolyzers, and ITM is a UK-based company. They're one of the leaders in this space. And Fortescue is obviously looking to do more in this, and the recent announcement in the big project in Queensland. But that's where the future is, because if it produces zero carbon footprint, that is important. And I think the other thing just with green hydrogen is that you need power to power up that electrolyzer. So that power needs to come from a renewable energy source. So something like solar, wind, etc. That's where that needs to come from. If you're still using power from, the grid, which is being, still harmful to the environment, well, then it's not pure green hydrogen. So pure green hydrogen is using a renewable energy source to power up that electrolyzer to then produce that hydrogen.
Right. Okay. So yeah, so that's kind of like where I got to in my research, was that basically the green hydrogen, it still involves a process before to extract the hydrogen, but it's just a cleaner, more effective way to do it. I've heard some concerns about companies taking like that byproduct and putting it underground as not necessarily being the most environmentally friendly thing to do for many reasons. So that's really interesting too. So I really appreciate the context there. Can we switch gears now and talk about so this is the kind of thematic, we know what green hydrogen is, and we know what the kind of hydrogen economy is and how it's going to be a big deal. I think there was a research note you guys put out, which basically says that it could be as big as $11 trillion, over the long term. What are the types of companies, and what are some examples of companies that operate in this industry, and what do they do? And I know you can just go straight into some of the companies that are inside the ETF.
Yeah, sure. So essentially within the hydrogen economy, it's still a very infant economy. So we call this type of this thematic a greenfield investment opportunity. It's very much in its infancy stage. It's not like where we may say battery technology is right now, which is a little bit more developed. There's more established companies. Technology is a bit more developed as well. Within hydrogen, the industry and the economy, it's still early stages. But it's companies that are producing fuel cells. So these are engines, basically, that's used to turn hydrogen into electricity and energy. So yes, you can produce the hydrogen, which we've talked about using electrolyzers, but how do you then take that hydrogen to actually make it a useful output, a power source? And that's where fuel cells come into it. You have companies that produce electrolyzers, like ITN. You have companies that are producing refueling stations. And essentially, they're basically like petrol stations, but for hydrogen. And so this is where, ships and other vehicles can come and refuel their hydrogen tanks. You've got companies involved in ammonia or green ammonia. And then you've got that a bit of a long tail as well. So a few examples that are worth noting are things like, say, Afc Energy. Now, Afc Energy, they actually are a UK-based company. They've got only about a 1.2% weight in the portfolio as at sort of 11th October 2021 in the HGEN ETF, but they produce scalable alkaline fuel cell systems. And what they've actually done, and this is actually interesting for people that are going, well, do I take battery or do I take hydrogen? Is it one or the other? Afc Energy has struck up a partnership with ABB. So a lot of people know who ABB are, and they're developing products for the electric vehicle charging market. So they're essentially developing this technology which charges electric vehicles using hydrogen. So it's a great synergy in terms of both the hydrogen play and the battery tech play. Another company that a lot of people will know within the hydrogen space is Plug Power. So it's probably one of the most famous in the hydrogen economy. It's a US-based company, sorry. They make fuel cells. So their fuel cells at the moment are primarily used to, power forklifts, so electric forklifts. So again, it's still electric forklifts, but it's being powered by hydrogen. So this again is the idea behind it. And some of their top customers are companies like Amazon, Home Depot, and Walmart. And they're looking to actually go beyond that value chain, and they're acquiring, green hydrogen producers. And two other companies, and just quickly touch on, one is called Nel ASA, and Nel is a Norwegian company. So Nel is actually, it's interesting because the Nordic countries, like Iceland, Norway, etc., they're probably one of the biggest, promoters of hydrogen power. And, Iceland, I believe, are wanting to be completely hydrogen power by 2030. So if we want to look at, countries and governments as an example, probably sometimes it's best to look to the Nordics. But Nel is, they run the largest electrolyzer plant in Norway. Historically, they're one of the oldest to produce hydrogen from water. And they also run one of the largest factories that makes hydrogen refueling stations. And they're also recently working with Nikola. So Nikola is Tesla's competitor, to produce the electrolyzers at their refueling stations. So widening out, again, that hydrogen infrastructure. And then, finally, a really interesting company is Doosan Fuel Cell. So again, Doosan's a Korean company. So what I've just, we've got a Norwegian company, a UK, a US, and now a Korean company. But Doosan's been producing fuel cells. So it's Doosan Fuel Cell, and they're building hydrogen-powered drones, which essentially can fly a lot longer than batteries. And that's the beauty of hydrogen power versus battery power. It's got a lot longer life. And Doosan Fuel Cell is actually one of the largest hydrogen fuel cell makers. So it's really interesting to see the hydrogen economy. It's still, again, as I mentioned, it's still in its infancy, but it is purely a global economy. And at the moment, there are no Australian names in the ETF. Never say never, though. But that is, something to be considerate of, that, it is very much, at the moment, hydrogen companies or associated companies are dominated by Korea, Europe, and the US.
Yeah, it's interesting to see so much of the portfolio allocated to the UK, because normally when we look at global ETFs, the weightings typically US, and then there might be, China and some other markets in there. But Britain, as in for country allocation at the time of recording, is 26% of the ETF, whereas the United States is 27.8 and South Korea is 17. Actually, when I was doing some prep for this episode, I actually saw Fuel Cell Energy on the US Energy Department's website, as in all their explainers showed Fuel Cell Energy, which is the company on the NASDAQ under the ticker code FCEL, which I know is in the ETF as well, which, it's just fascinating to kind of explore all of this sector. How about in terms of the portfolio itself and how you construct it? We talked previously about Semi, which has a kind of like 30 companies. I think this one has quite a few more, if I'm not mistaken. Can you tell us a little bit more about the portfolio itself and any kind of analytics around that?
Yeah, so HGEN also includes 30 companies.
It's 30. So.
Yeah, it is 30 as well, but the index that we track is the Solactive Global Hydrogen ESG Index. So, to break it down, essentially, it is companies from developed markets plus Taiwan and Korea. And the reason why we've looked beyond just the developed markets and included Taiwan and Korea is because of the developments in this space within those countries. But it looks at companies that are across the value chain of the hydrogen space. So it includes, fuel cells, refueling stations, electrolyzers, and more. What's really important, though, is that how do you identify a hydrogen, company? So with thematics, it's really difficult to go, okay, is there an industry classification for hydrogen? For a new thematic such as this, there isn't. So what do we do? So we worked with Solactive, and Solactive have, a proprietary sort of language algorithm that they use, and they essentially do sort of, apply this algorithm, look for keywords amongst different companies, and looking at different records, etc. And they try to identify the companies associated with the hydrogen theme using that keyword search. So they basically create this universe of what they believe are hydrogen associated companies. So once you've got that, you then go down the path of going, okay, well, there needs to be a minimum size that these companies have to be. So the minimum size for any new entrant in this index is 100 million US, and they have to be trading at least $1 million a day for the previous 6 months as well. So the average daily value traded has to be 1 mil US as well. So then you've got a smaller subset. And then the next part is to go, and again, because of, we talked about brown, we talked about grey hydrogen, they make hydrogen from fossil fuels. How do we exclude those companies? And that was really important to us because there isn't enough green hydrogen companies around, or companies associated with green hydrogen. It is a space that will be potentially the future of the hydrogen economy, but it's not enough to build an investable universe around. So whilst the ETF is well positioned to take advantage of green hydrogen in the future, right now we wanted to try and exclude companies that are very much deriving revenue from fossil fuels and, oil companies, etc., that trying to diversify. And we've seen a few oil companies, by the way, that what they've tried to do is, and we invest in the new companies that oil companies have set up that are just focused on hydrogen, but we don't invest in the oil companies. And that's really important. So, the index applies an ESG screen. So the ESG screen basically screens out, any companies involved in thermal coal, any companies involved in controversial weapons, which is important to note because when we've looked at other hydrogen ETFs offshore, we've seen some companies that we don't have exposure to. And the reason being is because they didn't pass our ESG screens. We don't have any fossil fuel companies. So any company that derives revenue from fossil fuel manufacturing or mining, they don't feature in this index. That's really important from where we stood on this. So the last part is you come out with what is then 30 companies based on their market size. And essentially you have a 2-tier weighting system. And the 2-tier weighting system is pure plays and non-pure plays. So a pure play company is a company that's a fuel cell, an equipment and tech provider, or a thermal and chemical processing machinery maker. So their companies are really much focused. So Plug Power is a pure play. They can have a maximum weight of 10% in the portfolio. A non-pure play is a company that's not associated with those sub-industries that I've just mentioned, and their maximum weight is 4%. So again, we've tried to tilt this as much towards pure plays within the portfolio. But again, you can't exclude other companies that are associated with this space because it is still very much a new thematic and there are newer players coming into it. So a bit different to say the semiconductor, which is a mature industry, very high minimums in terms of market caps, etc. Very easy to define. With this thematic, there has to be a bit more structure around the index methodology.
I thought it was interesting when I was reading through it how the companies are identified by searching the websites and through searching through public filings. I feel like that's a very interesting way to automate and use kind of pattern recognition, straight out of the gate, rather than using a standard universe, which is when we, if it's in this sector, then do that kind of thing. This is a much more kind of organic way to build that universe up. And it also means that a lot of companies can't hide, right? In terms of in terms of where they fit in the gig sectors or whatever. They kind of they have to publish material. They have to be talking about these things. They have to be benefiting from it directly to get included. And then you overlay that ESG screen on there too, which adds another layer of, I guess, stringency to it. How about in terms of using the portfolio? We've got a management fee of 0.69% per year, which is pretty standard across most thematic ETFs. Domiciled here in Australia, annual distributions, rebalancing every 6 months. How would an investor consider positioning this in the portfolio? It's a relatively new ETF, so it's only hit the ASX recently. How would they go about this?
So the way in which we see this being used, as I said, because it's a greenfield investment opportunity, it is a growth play, it is a megatrend. So again, when we talk about megatrend, it's long term. We don't see this for investors using it tactically. And if you actually looked at the performance, when we launched the fund, it was actually negative for the previous 6 months, 3 and 6 months from the date in which we launched. Yes, over the 1 year, it's done positive 40%. So there will be periods within thematics, there'll be negative performance. But over the long term, if you believe that this megatrend has a space and will succeed, then companies associated with that megatrend will do well. So that's important to note, that where we see the time frame of it. In terms of allocations, we see it as a satellite. So it's a complement to your existing building blocks within a portfolio. It's a growth play. It has a smaller allocation than what you might put towards some of those building blocks. And it's also important, we get asked this question, well, do I have to, replace another thematic? We've done some analysis, and this particular ETF of HGEN has no crossover to any of our other thematic ETFs. So HGEN has no crossover in terms of the stocks to ACDC. There's no crossover to, say, semiconductors, a semi ETF. There's no crossover to robo. So in theory, you can allocate to multiple different themes as long as you're understanding the difference and the stock overlaps between them.
Yeah, and that's the thing. Just being mindful of where a lot of people have that. They have two ETFs, like two indexed ETFs, like really vanilla ETFs.
Yep.
And then you'd look at the portfolio and you'd be like, well, why do you have two of the same thing? It's not really, really diversified. Okay, right. So yeah, it's a really interesting ETF, relatively new, and it's clearly something that is very important to a lot of people because so much trading activity in such an early kind of innings for the ETF itself. So this is a HGEN ETF, HGEN. We've got some links that we'll put in the show notes to a white paper that Kanish and the team have put together. Otherwise, you can head to etfsecurities.com.au where you can find out more about not just HGEN, but all the other ETFs Kanish just mentioned. So there's you can see actually what's inside it, the ETF, so you can click on the list and see exactly what's buried inside the ETF. I find that's a great way just to get to know some of the companies as well. So Kanish Chugh from ETF Securities, mate. Always a pleasure to chat. Thanks for coming on the show.
Cheers, Owen.